Hi traders, I hope you're really enjoying your long weekend. I had a great time today, the weather's not too bad. So I just want to bring you up to date with what's going on before I go into the videos. And what I'm doing is I am joining forces, as you've probably seen from some emails that have been going out. We're joining forces with Help You Trade. And Help You Trade is traders helping traders, and part of that team is Kiana, it's Craig, it's Mark, it's Daryl, which is not here at the moment, which he will be there, and a few others. And we are working with an organisation called shiftforex.com in New York. And Shift Forex are helping brokers around the world set up and get going. And the whole point is that the great resource that we've got here through these fantastic traders is going to really help these brokers increase their business, and it's going to help you and give you access to a wider range of skills, wider range of traders, and really help me and support me, and I will support the others in really making sure that everybody gets the right education and the right skills to go in and out these markets. So in the coming weeks and months, there's going to be a lot more happening, a lot more programs, a lot more events, and so on, and you'll start to see the changes come through. So this is the new email format, and you can see if you scroll down here, you either click on that button or this line of text to give you the video in the blog. And if you scroll down here, if you ever forget what hours the trading room is on, that's on the bottom of the email, and of course the login for the trading room is on there as well. Okay, so that's what's going on at the moment. So now let's just have a look at the markets and get straight into the preparation for the week ahead. Right, so what we've got here is the Dow on a daily on the right and the hourly on the left. You can see the way I've got this hourly marked up. This is fibs. Let's squint at this, and you can see what's actually been going on here. So forget all the news, but this was a really nice move to the upside, 3 waves, and we had an A, B, C, D wave correction. Now currently we've had 2 waves down, but with 2 waves down we just shot up, well we didn't shoot that far, and then hit this big wall up here. So if when we open on Monday, and the US is open on Monday, obviously the UK is not back at the desks till Tuesday, but if we start closing up here, then we need to start buying pullbacks and then look at how it handles up here. Otherwise, if we knock our heads against this wall and we can't break through, then we are potentially going to tumble down. But let's look at the bigger time frames. And I'll talk to you in the room as the week ticks by about how to handle 60-minute charts like that. So we've matched the previous week's, pretty much almost point for point, matched the previous week's sell-off. But more importantly, we've closed above this 127 extension. So that's why there's a lot of noise out there about how the market needs to correct, how we're looking at 10, 15, 20% correction. Okay, that could be on the cards. That could still be on the cards, because this is an incredibly important area, and if we come up there and just fail, then yeah, we could be heading for a big move to the downside. But in the meantime, the trend is still up, and in a way it's good that we're not at our desks on Monday, because that will give us a chance to see what the US want to do with this market. And we can come back to our desks on Tuesday, and then we can pick our way through it. I will still be doing Traders Round Table on Monday, so come and join me. We'll keep it nice and short and sweet, but we'll just look at the essential charts and try and pick our way through what's going on. You see the way I've got the daily Dow mapped out, and if you look at the way the fibs have behaved, here we have October, November, December's nice move up, pulls back, it legs up, and that's quite a decent drop. So that's a lower low, and this was a lower high compared with up here. but then we ran up to match December year end last year, only to pull back to this hammer-like bar here and run up. And we are already getting a couple of topping tails there, so the market's nervous. And like I said, all we've done is tap into this sort of sell zone up here. So what happens here next week on Monday is critical. What we might end up doing, there's obviously 2 or 3 scenarios here. We might end up just chopping around, finding support here, finding resistance up here, and just chopping around here until May, early summer, and then perhaps start getting a move then. And just to remind you, this is a seasonal average taken over a 20-year period from equityclock.com. So here is the Dow, and it typically come out of December into January with some selling, and typically bottom in March, start to move up and pull back as we get into April. April typically pulls back, and then from April into May we typically run up. So this is where we have been, which is in good timing, in sync with this. So if we start closing above this important area we got here, seasonally over the last 20 years the average suggests that we could get leg up, at which point in May and June we could pull back, and then in the August period, as we come out of August into October, get some sort of adjustment. Now, just because this is an average over 20 years doesn't mean so it's going to happen, but it's interesting to see that, because so far behaviour is not a million miles away from that. So just bear that in mind before you start getting too bearish in this market. You've just got to draw our attention to the fact that what's in these charts is that the dips are getting bought. So stay focused on that and try and cut out the noise from the markets, from the news I should say, sorry. Before we move on, let's just talk about the nasdaq. So the nasdaq has closed above this fib level here. On the daily fibs from the 2014 high and the 2014 low, we're knocking up against this 38.2%. So a full 50% would be just above. Now that would potentially be a great place to get short. And the nasdaq has led this drop. This was selling before the S&Ps and the Dow. So if the nasdaq is going to hit that 50% and then roll over, we need to trust that and keep an eye on that and then monitor that. So again, be interesting to see how that opens on Monday. S&Ps coming up into the top of that box. Let's look at the FTSE. That's a sweet move. That is a very, very sweet move. And look at the weekly on the left. When it came to the bottom of this channel, so we've been shuffling around in this channel, and here we are at the bottom of the channel, and then got bought. And then coming up to the top of that fib zone. But that's a very, very good daily. And the data that's coming out of the UK and the US has been very good. We had a really good jobs figure on Thursday, I think it was. Must be in Wednesday, in fact. And look how the 50 and the 200 look as if they are potentially crossing. Let's look at the Nikkei. Nikkei is a little bit like the Nasdaq coming into on the weekly. You can see we held a fib area, closed above the 50 EMA. We're just coming into this congested area as we are doing on the Nasdaq. So I would expect, on the back of last week's buying, I would expect, at the very least, I'd expect to see the first part of the week into some buying, and then we've got a lot of data coming out on Wednesday, which I'll go through in a minute. Let's talk about the basic Forex. Pound. Lovely close on the weekly. I mean, that weekly is very, very significant. You can see there's a huge wall on there. They've been knocking our heads against since July. And here, that's a close above it. It is not a particularly convincing bar with a couple of topping tails there, but nonetheless, that is a decent close. But you can see the problem we've got is that's a huge amount of resistance. If we come back to 16750 and hold, then I suggest another test of that area then could give way. Every time we test it, it weakens. Every time we knock on the door of that wall will weaken until at some stage it will give. That is a reversal bar, but it's not extreme RSI, it's high RSI. I'm not shorting it, I'm just letting it sit there. Euro, to be perfectly honest, I haven't got a clue what the euro is doing at the moment. A lot of blue bars, but very, very hesitant, waiting for some suggestion from the ECB whether they're going to take any action or not. There is a lot of rumours about potential easing in Europe. That would devalue the euro. If they start printing more of the euros and increase supply, then that will see that diminish. Let's look at the Aussie US before we move on, because I'm about to talk to you about the pound Aussie. Very weak, but we could just, if we hold here and start closing a little higher, we could just push up for another leg. But we have had 3 decent legs up on that. We've had 1, 2, 3. So this is an A wave correction. Could have a B wave, a C wave, and then potential nice big D wave. And let's switch right on to the pound Aussie dollar. I'm swing long this one. I just initiated a swing long middle of last week. Now I was a little late into this. I bought round about here, this 50% level. I took my eye off this one. Now, normally I'm really keeping a close eye on this one. I feel as if I am in quite high. But I'm risking 60 points. I have a little buffer. I've got that much profit. But at the moment, my risk is matched to my points in the account, but of course the points in the account are not in my bank. I'm looking for at least a retest this area, possibly a big move up. Now if you look at this, this is a squint look at the daily chart here on the pound Aussie. This is the first time we come in contact with that 200 EMA in a very, very long time. You can see we had this really nice move from November, December, and a very powerful move up in January. This was the first time we tested the 50 EMA for a long time, since November. So that was 1,000 points. Over 1,000 points. There was 182 there, and that top was 192. Huge. You have to sit through a 250 point pullback there. If you did, you got paid. So I'm hoping that my position here, if we get mirrored, if we see some symmetry from this side, then I could be looking at least 500 to 600 points. In the end, this turned out to be head and shoulders, so I'll clean this up in a minute. And that was the neckline, and then down we came. But if I scan back on this one, we haven't tested the 200 EMA since 12 months ago. And seasonally, this is a good season for the pound Aussie dollar. This the last 2 years, previous 2 years, this has run up in this period. So I am going to sit in that one in the June contract and potentially sitting it close to the end of the contract. Pound Aussie dollar, I have been swinging along this one since this area here. And obviously this is a massive wall up here, so I took it off there, and then I have been buying back at this point here. Don't worry about this bar here, that's Good Friday, so next to nothing going on, so ignore that. But if we see 171 on the pound yen, that's big, and like I said, if we can then come up here and test 173, knock on that door again, that may well cave in. And look at the weekly. So we come up, pull back to 200, we come up, we pull back to this support. This was resistance, that became support. Lovely big run up, come back to this level here, and again we got a nice big box here forming here, which could potentially leg up to 180. But let's see. Buy the pullbacks. If they don't work, then get out. Manage to stop and then move out. Euro yen. This is still worth a pullback, but just be wary of it. I'd much rather buy a pullback in the pound yen than this. So would I buy a pullback in this? Intraday, if I get a tight stop, I would. So 141, we're 14150 at the moment. 141 is a potential pullback area. Tuck your stop under those two bars there, and then see if that can come up there. Like I said, my preference is for the pound yen. And that's all I've got for you on the Forex. So I just want to add to that, the Euro CAD is interesting. Pound CAD's been very, very strong. That's worth a pullback as well. If you buy a pullback here, 152, or if you try and hold out an offer, a bid for 15180 area with a stop under here, this may well break out. A little bit of a hesitant weekly up there, but this has been an almighty big run. 1, 2, 3 moves. A, B, could do with a good pullback really. It might well struggle underneath that trend line. Just keep an eye on it. With just a thought. I'll keep an eye on that Euro CAD. Right, let's look at commodities. So a contract changeover in the oil. We're now on the June contract. This is the June contract here. If it's not a bad finish, and we very hesitant weekly there. If we see 101.70 all the way back here, I'm not sure we'll see it. There's certainly a lot of 105 was a big wall. But if we're a little distant from the 50 EMA, if we can come up, if we get any major pullbacks to 102, then that may well push up as well. This is the typical seasonal chart for oil. Again, not to say this is how it's going to happen, but we tend to bottom out in January, February, and we tend to climb up in March, up in April, run up into the end of April. Remember, we're looking at the June contract at the moment. So this typically runs into June, pull back in the summer doldrums, and then peak generally in July and August, and then sell off into the autumn. The reason why is because you've got the contracts down here in Feb, April and June go into the dry season, which is obviously June, July, August. And then by the time you get to the early autumn, all the heating oil is generally already in storage. The dry season's over, so then you tend to just sell off into the back end of the year until you see a spurt into mid-winter. Alright, and that's not to say that's what's going to happen, it's just interesting to see that. Grains have been a little tougher. Huge support at 660, which is fib support. Pulled back into that 61.8% fibs. Pulled back to this decent support. It's a buy. It looks like a stopping bar. It looks like an inverted hammer. So any buys around the 690 area here could be with stops underneath, even as close as 680 if you want. It's down to you. Could start to see that march up to this 750 area on the wheat. Just assess the risk, see what you think. Corn. That's now looking like it's now looking quite weak. It's struggled up there at the 5. If you're in it, just keep your stop under this support, because in a consolidation period, a little period of selling before the next leg up is not untypical. This is what happened here. So it ran up, moved sideways, all these dips got bought down on the bottom until it legged up again. So if all these dips get bought again, it could leg up again. Coffee, Robusta, had a good close there. Sorry about all these gappy charts, I have to sort this out soon. Beans, struggling at resistance, 15's massive, fib area at the top there. Gold, I thought this might pick up, but huge sell-off on Tuesday and then struggling. So sit tight. Let's see if we come down here to the 1250, 1260 area. On that, lean hogs is holding up nicely. Copper's a good barometer for the economy, and that looks okay. Excuse me. So let's leave that there, and on Monday on Traders Round Table, I will do a stock scan as well as a quick look at the markets. So hope you really enjoyed the rest of your Easter. Happy Easter to you, and look forward to seeing you next week. Cheers.